evening, traders. This is Brian with TraderShark.com, an educational website to learn how to trade the E-mini S&P futures. Today is Wednesday, October 16th, 2013. I'm going to open up with a 30-minute candle chart, and I want you to see sometimes when you get this sideways consolidation and you're more of a day trader, you don't see the bigger picture. And so I always tell people to take a step back to a higher time frame chart, 30-minute, 60-minute chart, whatever works for you. And in this particular case, I want you to see this opening candle was quite bullish, obviously, and the trend continued higher until our signal candle right here at 1 o'clock in the afternoon gave you a nice indication it may be pulling back, and then your next signal candle right there at about 3:30 for a run into the close. So you've got an action, you've got your reaction, and you've got your continuation. So it happens on all time frames. Let's go ahead and work our way over towards the lower time frame chart. Okay, this is our lower time frame chart. Price action opened up here at 1702.25, represented by the white dotted line. We generally don't trade for the first 15 minutes. I'm not a breakout trader, but you can see the momentum had worked its way to the high side for a breakout, continuation. I'm not much of a breakout trader. This pullback was right there at 10 o'clock, so I did not take this trade, but the setup was very nice. In the meantime, fortunately, we did not take the trade. It would have been a -2 tick stop. Waited for a little bit deeper pullback, back in below our moving average for a continued pullback that eventually paid off here. The yellow numbers are the ones that I did not take. I took the white one right here at 17. If you took a wave trade, there was 3 different setups that occurred right at this level. The wave trade occurred, would have been a 10-tick trade. I took what's called a tidal wave trade. I exited up there around 1714.50, which was an hourly range high level. And then plus 25 is if you worked your way all the way up to the shark band, which is at around 1717. As we continued through, this was all the waiting period. So this is quite a long trade. And then had another pullback. This was a wave trade setup. Notice the auto wave kicked in. First target was hit, second target was hit, total of 10 ticks. And then up here was the profit target for the tidal wave. And so you have to independently separate your trades such that your profit targets are different on each trade according to what's in the trading manual. The high of the day, we talked about that at the opening of the day. We were talking about where the shark bands were. If we broke above our level, next target was 1717. And then on the retracement, there was a nice clean opportunity pullback right here at about 1122 for a continuation. It is a counter trend trade. When you do a counter trend trade, your profit targets are a little bit shallower or tighter. So I only got 6 ticks in this trade, and then we went into what's called a cautionary trade zone from 11:30 until 1:15 Eastern Standard. Look at notice the sideways movement coming out of the no trade zone. There was a little bit of a burst higher up into the 2 o'clock time frame, and then as it reversed at 2 o'clock, we generally don't want to be in any long positions. There was a nice little scalping opportunity right there at around 2:15 Eastern Standard Time for another 6 ticks. Continuing on into the afternoon, I don't generally trade from 2:30 until 3:30. There was a little bit of a setup for a continuation long. This also would have had a reduced risk stop out. Did not take it. Another opportunity to get long. Right in here, again, I was not trading at this point by 3:30 in the afternoon. It did finish up higher as we saw on the 30-minute candle. To learn more about these and more advanced trade setups or to get a copy of the Trader Shark trading manual, please visit TraderShark.com. Thank you. Have a great evening, and I'll see you in the Shark Den in the morning.